Alright guys, welcome back to my channel. This time we're going to be talking about three financial statement projections, three financial statements from a projection that I'm going to be discussing here, and I'm going to be loading this up to my coffee site, so you can just go ahead and please, if you want, if you find this useful, you can go ahead and download it there for a very low price. I think it's by default $3 or something, but you can pay whatever you want. Um, yeah, and if you want to invite me a coffee, well, that's great, and I'll thank you very much for your kind gesture. Okay, so let's discuss this a little bit, and yeah, of course, if you're kind enough to drop a like, and I'll be very thankful too, and share this video with anyone you want, anyone you think it's gonna be the need of this one. Okay, so this is the first tab here at the income statement. This is a pretty average this one, and I'm gonna be discussing this very shortly. You know, the values in here. I mean, the increase in price, the increase in numbers, in price, in quantity to sell, and all the rest of the inputs that we have over here. We'll be talking about that very shortly. Also, we have this balance sheet here, that if you notice, there are two colors here aside from the gray that we see all the way um, to the end, and that's has a sole purpose of just providing some guides for us to look at cells or select cells. Okay, but you'll see that very shortly. We have another tab in which we're going to be talking about the cash flow. This is going to be the statement of cash flow, which is going to provide the net cash flow for the project. That's going to be linked directly to the balance sheet through the cash and equivalents account. And here we have the capex, or the fixed assets in investment that we're going to be needing for this project, and I'm going to show you real shortly. Shortly, I'm going to show you how to deal with this. And as you can see, there is a light blue over here that coincides here, and it goes over here too. And the yellow one, well, that goes over here, and the green one that goes here at the, I don't know where, oh, here at the capex part in the cash flow statement. So let's, without further ado, let's just go ahead and start this show. Okay, so we have this project, and today, let's say today it's 2022, even though I know it's 2023, but let's pretend that this is today. I mean, when we start the project, that's going to be 2022, and those are the inputs. This is the unit sold, and we're going to be starting off with a value of 1,000, and the price per unit, that's going to be $10 per unit. Okay, and the quantity, it's going to increase by 5%, and I have a bunch of numbers over here that I'm going to be explaining shortly. Okay, so for that this is kind of like a Monte Carlo approach, like something that I wouldn't that I didn't want to be so flat. I mean, I could just pretend to have a 5% increase every year, but I wanted to do this so you can like have some random variations here. So you go to, yeah, for the numbers, right? So we start off with 5% increase, and we need four values. So for that, we go to the data tab and go to the data analysis, to the let's just give it a second. Okay, okay, give it a second. Okay, so we're gonna be selecting this random number generation, and then the number of variables, that's gonna be 1, and the number of random numbers are gonna be 4. The distribution, that's gonna be your normal distribution, and we're gonna be talking. I'm gonna start with this 5% in the beginning, so that's gonna work like the mean, and the standard deviation, that would be in my case 0.1, or whatever you think it's correct. I mean, you can even go like 0.05 if you want. You have a higher want a higher standard deviation. The output range, well, let's select this part here, and that you see it okay. And there we have it. So let's just go ahead and use these numbers instead of the other ones that I had before. So I copy this, stand here, right click, give it a second, paste special, transpose. All right, so to get the format, you just erase this. To get the format, I'm just gonna go here, home, and I'm gonna select the brush and select the cell, and uh, drag, select and drag all the way to the very end, and there you have it. So that's the way I did for all of that. For the cost of goods sold, those are in terms of revenue. The assumption is in terms of sales, though that those two are not, because well, those are responsible for the sales or the revenue. So the cost of goods sold, this is pretty average to be 50%. So I did exactly the same thing. Just to remember you, just go ahead and go to data, to remind you, a random number generation, and then, well, yeah, let's get 5 numbers this time. Let's get 5 numbers instead of 4. 5 numbers, and the distribution, that's normal distribution, and the mean 50%, because you have 50% over here. Let's say that the standard deviation is like 2.5%. All right, and then the output stays the same. So let's just go ahead and copy this, put it over here, paste special, transpose, enter, and let's get the format back where the way it was, and there you have it. And you go ahead and do that for the rest of it, and for the rest of the values over here. But the tax rate, I think this should be almost the same. So every year it's gonna be the same. So this is partially what I have set, that and some other values in the value sheet. But let's just go ahead and start. Okay, so for the units sold, you just take this number, I'll multiply this by 1 plus the first value. So we hit enter, and then we select the last value multiplied by 1 plus the next growth rate. Yeah, and then we drag this cell, this only cell, to the right. And the same goes for the price. So for the first part, we're gonna be using $10, and then we're gonna be using the last value, 1 plus the other value for the growth rate. Now I think I should be like using these round numbers just for the sake of a good presentation with certain numbers, and I'm gonna be doing that for the other one. Round, we round this and comma 0, and now we drag this right. There you have it. Okay, great. So the net revenue, that's gonna be your units times the price, and we copy this and Control V. Okay, so for the cost of goods sold, we already have the net revenue, so that's multiplied by the number that we have over here. Then select that, and then the gross profit, that's gonna be okay. For let's just keep the signs, right? Let me keep the signs to be negative. Go to the very end, and that is because I could like go adding up all the way to the end, and that's gonna be a lot more a lot faster. So we start off with the same values here. Okay. We're gonna be selecting the net revenue, and we're gonna be punching this value 2 times so we can lock the rows instead of just the cell, right? Okay, so this is the operating expenses. So the operating expenses are going to be this value. So we drag right and we drop it, and let's check that everything is okay. So we're using the net revenue and we're using the marketing here. Yeah, for marketing. And the last check. All right. Okay. Now we're gonna be getting the earnings before interest, taxes, depreciation, and amortizations. So that's the sum of the gross profit and the rest of the negative values that we had before. We select this to the very end. We're gonna leave this depreciation expense like that for a moment, and we're gonna get the earnings before taxes for interest and taxes, right? And the interest expense, you're gonna leave that like that too. So far, we're just filling up the values that we're able to be getting using the information that we have, and then this times the tax rate, which could change in time, but I'm just assuming that's gonna be 21% every time. So okay, so we're partially done here. We're gonna be needing the depreciation expense and the interest expense to complete this income statement. So let's jump right to the balance sheet. Okay, so this is a pretty straightforward balance sheet, and this is basically the same. The only thing that we're gonna be dealing with here, well, if you want to know what I did here, let me just go ahead and show you real quick. So I got this formula over here that probably is not recognizable with the text. So let's say that I want to have a certain value over here, and let me just go ahead and do this once again so you can see. So I want to know the value. I want to have the value of this cell, which is the accounts receivable, and I'm gonna have, and I want an additional cell there. So I could do this this way, or I could just change the format, but this is, I think, a best way, a faster way. So I hit this symbol that I don't know how to say that in English, but yeah, and then open quotes and space as percentage of revenue. Close the quotes, and there you have it. Yeah, so that's for the other part, and yeah. Okay, so everything's not in terms of the revenue, as you can see, because this traditionally makes more sense to use the cost of goods sold for the inventory and for the accounts payable. But even nonetheless, you can just, if it works better for you, you can just like go ahead and do it in terms of revenue. There is no rule that you have to do this my way, but I mean, I'm just using the traditional approach. And then I have these numbers that are equally defined all the way to the end, and I used 10 days of the 365 days for accounts receivable, for inventory, and for accounts payable I did like 12 days out of the 365 that you see over there. That's pretty straightforward. It was already linked, so if you change that, let's say for example to 11 days, it's gonna change all the way to the end. But kind of like using this, we're gonna be talking about this later in a second. Okay, so we can't get the cash and equivalents yet, but we're gonna be able to find the accounts receivable. So let's just go ahead and do that on the inventory. Let's pull this information from the other table, which is the revenue. So the net revenue, and let's use a minus to get the COGS, which is this. Okay, and we select that to the very end, and let's fire. Okay, so this in terms of revenue, so this multiplied by the accounts receivable, then that one, which is the inventory, in terms of cost of goods sold times our indicator, and we drag this to the very end, and then the current assets. Okay, so that's gonna be the sum, and I'm using this 2022 year as a basis, as the starting point. So we start off with that one. We're gonna be changing this value over here too, but that's a surprise for you. So okay, next, fixed assets and accumulated depreciation. So since we need to do this, let's just go ahead and get it over with. So we have these three machines that we're gonna be needing for this project, and the asset life, it's gonna be 5, 7, and 7. You can change that every time you want. We're just gonna be adding this up, sum, yeah, that, and then we're gonna drag it to the right, just in case you wanted to add an additional machine, so you get that. All right, so now the depreciation of the machine, that's gonna be yeah, gonna be this value divided by, I'm gonna be yeah, that one. We're gonna be pressing F4 to log D. I mean, you press it 3 times to log the D4, and you drag it down 2 more spaces, and then since we're gonna be probably needing another formula for further depreciation expense, just in the case we buy something else. So we have the machinery one, which is 300. That's gonna be the depreciation for that year. We're gonna be adding this depreciation too, one over here, and we're gonna be selecting the asset life too, and we're gonna be clicking this 3 times, yeah, and then so on and so forth. Okay, I think it should self-populate. Yeah, exactly. Yeah, and yes. So the accumulated depreciation expense, get this up, and we add the last one to the present one. Yeah. Now let's drag it right. Let's see. Okay, so if we change this, let's say 2050, 2500, that we bought something in year 2025, that's gonna be observed in the next year. As you can see, the depreciation it has a 1 year lag, and this only takes into account a straightforward depreciation, straight line depreciation expense. Sorry for that one. Okay, so now we're ready. Wait, I think I lost the format over here. This should be a gray. Yeah. And the blue one, that's for 2022. So okay, so we're gonna be linking this to the asset, and we're gonna be adding this to the next one, right, to the purchase of 2020. Right, we're ready now. The accumulated depreciation, that's okay, we get this negative value. That's gonna be this number. Now we're able to get the net assets, which is basically what you should expect in the non-current assets. Okay, so now since we already have taken care of this depreciation expense, let's just go ahead and complete this depreciation here at the income statement. So we sum this up, sum it here, right? We hit enter, and then we copy and we paste. All right, great. What else? Okay, so the total assets, that would be total current assets plus non-current assets, right? And drag this to the very end. All right, now accounts payable, that's in terms of the cost of goods sold. Also, so we multiply that by this percentage, times the percentage that we just found with the cost of goods sold, and then well, actually that's the only one that we have in it. For the sake of the formula, we're just gonna leave it like this. Okay, now the long-term debt. Okay, so we have the yellow cell. Finally, the yellow cell. So for the total investment, I suggest you to select the total fixed assets of 2022 plus hold on, go back. I should be doing this. Oh, wait. I'm gonna be adding this at the very end. Okay. I'm gonna work the values for this for this for this sheet, and then I'm gonna be adding the other one that's placed in another place. Okay, so the accounts receivable, that's gonna be this times the accounts receivables plus the inventory, which is cost of goods sold, times this minus the cost of goods sold times the accounts payable. And that's a minus because the inventory and the accounts receivables are money that we have to keep in the company ready to finance our clients. The accounts payable, that's the money that your suppliers are getting you, are providing you to finance your operations. So you have to pay some, and you finance some others. So that's the adding and the subtracting stuff. Okay, so and then we add this to the fixed asset part here, and we got this number. All right, so randomly I'm just gonna choose 60% as a debt weight. So we're gonna be multiplying this value times that 60%. Let's just make this amortization table real quick. So we start off with this one, the interest expense, of course, that's gonna be the initial balance times the interest rate. All right, now the payment, PMT, the rate, that's 10%, the number of periods, we're gonna be using 5, the present value, that's minus this. Yeah. Okay, and then we're gonna be linking this to the very end here. All right, and then we're gonna be dragging this over here, and the payment to principal, that's gonna be, well, your payment minus your interest expense. So your final balance, that's gonna be your initial balance plus your interest expense minus your payment, and the final balance of year 0 or year 1, it's gonna be the initial balance of year 2, as you see. So I can complete this to the very end, and let's drag this far off here. We ended up with 0, and that says that everything is okay. So the term here, the long-term debt, that's going to coincide with the yellow value here, and the rest of the values are going to be the final balance of each of the years. So we drag this here. So we have a total non-current liabilities, which is basically this. Okay, so the total liabilities are the total current liabilities plus your non-current liabilities. Let's copy this and Ctrl V. Now for your equity, okay, so since the money that the bank is providing out of the almost $5,000 or 5 million, whatever you say, that we need for this project. Initially for this project, the bank is providing 2,979. So the stockholders are gonna be providing the rest, right? And just, well, I know this is like 40%, but let's just I mean uh, let's find out just using the formula, which is actually the same. I think I messed it up. That was here where I was supposed to be using the formula, so I got 40%. We'll take care of this later, even though we don't need this so far, but I think it was a pretty good idea to have the value of the walk just in case if you need it for some reason. All right. So what else we need here? Okay, so we have the stockholders equity, which it's gonna remain the same for all the life of a project, right? And the retained earnings, well, that's well, so the income statement, right? That's the thing that's gonna be provided here, and then we add this to the next year, and so on. Yeah. Now, there is something that we're missing here, and that is the interest expense. We already have that, so let's check out what it is here. That's the interest expense. We drag it to the very end, and that's it. Okay, that should take care of it. Everything. Yeah. All right. What's this? Oh, well, I didn't erase this. Okay. Oh, I'll get that in a second. All right. So the sum of the total equity. You have it. Now, liabilities plus equity should be equals to your assets. That's not going to be the case here so far because we're missing out the cash and equivalence values. So that's going to be the total assets here. All right, but you know, we can set this up because if we didn't, okay, so we got this certain amount of money, and since part of it is went to to the fixed assets, the rest is gonna be in cash, right? So we're gonna be selecting this value, getting selecting this value and subtracting the assets, the value of the assets, right? To get the cash and equivalent. Okay, I hope I'm not gonna get a loop here. If not, I'll find another way. All right, didn't. Okay, and the difference. Okay, let's calculate the difference here. Let's see how far off we are. Yeah. Okay. Great. Okay, so we got the first year already taken care of. Let's see for the rest. Okay, now for the cash flow, we start off with the net income. So start off with the net income here. Then plus the depreciation expense. So since we use the negative value, we're going to be using the positive value. And that's just the depreciation, not the accumulated depreciation expense. All right. Now, variation of accounts receivable. So minus, we open parenthesis and go to the balance sheet. So the final value minus the initial value. Okay. Now minus the variation of inventories, and we do exactly the same. Final value, I mean 2023 minus 2022. In this case, it's gonna be 0, so 0. Okay. We select this. Oh, and plus, and let's do plus the variation of accounts payable. So that's, but this time we start off with a positive value. So this minus the one before, which is a blank cell. Yeah. Okay. So let's select this, add it, and drag it to the end. And this is the operating cash flow. So we add everything here. Copy and paste. Okay. So now the capex. Remember the cells, the green one? Well, let's check for the green one. Let's see where it is. Where was it? Where was it? Okay. I don't know what this is. Okay, let's see. Okay, so the capex. Okay, so that's gonna be the value of the assets of 2023, and the blue one, it's gonna be the assets here. But this is supposed to be negative. I'm sorry, I have to change this to negative, minus, right? Then from here, I'm gonna have to drag this to the very end. No, way, yeah. But let me just change the format. All right, yeah, because the green one, I mean, uh, yeah, that wasn't. Yeah, that was there. Just I don't know what happened. All right. Okay, but this okay. So the meaning of this is just additional values, but we should be just like using negative here, and then we're gonna be adding this up, uh, just like that, right? And this is gonna be negative all the way to the end. Let me just if I don't have to change the format again. Let me drag it to the right, and there we have it. Okay, so if we change this, let's say for example that we have 2500, we should be getting -2. Okay, great. All right, so okay, let's erase this real quick. Okay, let's keep going. So now the net borrowing, yeah, that's gonna be a yellow cell here. It's gonna be the net borrowing, and then the repayment of the debt, that's minus, which I think it's yeah, yeah, that's here. Here the payment to principal, that, right? So if we need additional payments, but this is not designed this way. Okay, so this is the financing cash flow. So let's add this. Wait, wrong parenthesis. Okay, copy this. Okay, we paste this. I got that twice. Nope. Okay, whatever. Let's do it. Kind of redundant, but it's okay. But it looks good. Okay. Uh, so for the equity, stockholders equity. That's the net value here. Balance sheet here. We'll be subtracting this. So this. So this plus this plus this. We have this. Oh goodness. Yeah, this should be positive. Sorry. Okay, so that coincides with the initial value over here, which is the cash and equipment. Okay, we can link this to the to here. Let's just go ahead and do that to get it more clean. Yeah, looks a lot better than just adding on stuff. All right, now let's drag this to the right, and let's check the values. Okay. I think it, yeah. Okay. Let's put this here. So we add this to the last value of the cash flow, right? And we should be getting a 0 here. Now, drag to the right, and everything is 0. So we did it. That was correct. Now, for the last part, even though it's kind of like accessory or whatever you want to call it, let's just find the walk. Okay, this is just an additional part. I mean, it's a good thing to see. Okay, so the cost of equity, that's going to be 18% times this 40% plus, and 60%, which is the share of debt that we are taking, times the value or the cost, times 1 minus your taxes, which is this 21%, and then we hit enter and we got this value. Okay, so I think this is it. Yeah, you got your income statement already taken care of, you get the balance sheet, and you get the cash flow. All right, guys, thanks for watching. If you want to invite me a coffee, well, I'll be more than thankful for that, and I'll thank you for your kind gesture if you do. Remember that I'll leave this in my coffee on my coffee link that I'm gonna link in the description below. You can download this file for a very cheap price, and if you want to do it from scratch, well, that's okay. It doesn't matter. I mean, the whole purpose of this is for you to learn, and I would appreciate your like, and if you can share this content with somebody else, well, that you can think that's gonna be if they can find it valuable, well, I'll thank you very much for that too. Don't forget to drop a like, and I'll see you later. Peace, bye, thanks a bunch.
Day, me and I game. Day, bye, day, yeah. 楽しいこと yeah. それだけじゃねえ。足りないんだね。ほらすべてが幻。舐めたきゃ舐めとけ。代わりにゲロ吐く。I have to go and boom boom. Let's go, let's go, let's go. どこへ Who's gone, who's gone どこへガタガタまた吠えてる Motherfucker 相手にできない
Ha 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 ha.